There is a puzzle in the market right now. Artificial intelligence physically cannot function without massive amounts of electricity, yet the companies providing that power are the coldest corner of the entire AI trade. While the stock sits still, Wall Street's internal models are sounding an alarm. Analysts see immense upside, but for now the market is staging a measurable capital strike against the sector. Analyst targets show a massive disconnect. On the left, power producers like Vistra and Constellation carry 52 and 41% upside. At the far right, GE, Vernova, and Carrier have effectively reached their ceiling. There's virtually no room left here. The industry has accepted that AI needs power, but it is currently struggling with a timing mismatch between the immediate demand for chips and the multi-year build-out required for the grid. To measure just how deep this freeze goes, we can use the Relative Strength Index. It's a mathematical gauge from 0 to 100 that identifies when an asset is washed out or overbought. On this 14-day RSI chart, utilities like NextEra and Duke hover in the low 30s, signaling zero buyer interest. Even the warmest name, Vistra, only hits 51. Meanwhile, the AI chips they power ran to scorching readings of 75 to 90. Momentum investors have abandoned this aisle of the store because the timeline for power infrastructure doesn't match the instant gratification they find in hardware. The market follows a strict rule. It pays a premium for growth that is accelerating right now. Physical infrastructure is incapable of moving that fast. Clearing permits, pouring concrete, and upgrading the grid takes years of heavy capital investment before the first dollar of AI revenue hits the books. You can see the result in next year's projections. Constellation's revenue growth is expected to drop from 33% to roughly flat. Vistra falls from 31% to just 9%. This deceleration is a structural feature of the industry. Massive capital projects require a decade-long view, stretching the growth curve out far beyond the attention span of a typical momentum buyer. Regulated utilities offer no escape from this slowdown. Because their profits are capped by law, names like NextEra are designed to stay in the modest single digits. However, there is one corner of this infrastructure basket that behaves more like a hardware company than a utility. Vertiv is the exception. As a provider of cooling hardware, it is expected to hold 36% growth this year and compound at 28% through next year. This forces a choice. You can own the long-term safety of physical contracts or the immediate momentum of cooling hardware. The two strategies require completely different timelines. To make that choice actionable, we map the sector by next year growth and upside to target. This creates 4 distinct strategies. The top left is the re-rate bet, including independent power producers like Vistra, Constellation, and NextEra. Here, you are betting that Wall Street will eventually assign a higher valuation to their future cash flows, even if the near-term revenue looks flat. The top right holds exactly one name, Vertiv. It is the only cheap and growing option on the board. You get the compounding growth of a hardware company, but you lose the regulatory safety net of a utility. You are trading safety for momentum. The bottom right contains the grid infrastructure names. These are fully priced for that growth. Finally, the bottom left is Ballast, slow, steady regulated utilities like Duke and AEP. Buying power stocks as a single group is a recipe for frustration. Success depends on matching your capital to the specific quadrant that fits your timeline. While the market waits, corporate insiders are already moving. These are the executives who can see the multi-year contract backlogs that haven't hit the public earnings reports yet. Look at the insider activity over the last 90 days. On the right side, there is aggressive selling in the momentum-driven grid layer. Quanta has seen nearly $500 million in net selling. Chasing these specific grid names today often means providing exit liquidity for the very insiders who are cashing out at the top. On the left side, the story flips. Insiders are quietly accumulating millions in boring, slow-growth utilities like Dominion and AEP. Insiders are using the current price freeze to accumulate the slow, regulated assets, moving their capital toward the timeline the market currently hates most. A sector this tightly compressed eventually responds to a specific spark on the calendar. The composite score for the whole sector reflects this tension. Every major name is clustered between 37 and 52, a neutral band that signals the trade is neither broken nor a screaming buy. This neutral state acts like a coiled spring. Because nothing is priced in, the sector becomes incredibly sensitive to any data that proves the AI build-out is accelerating. The upcoming Broadcom earnings report is the immediate catalyst to watch. As a primary supplier for the data centers housing these AI chips, their order volume serves as a leading indicator for the physical power load that must be built to support them. If Broadcom confirms that AI spending is accelerating, the read-through to future power demand is direct. This earnings print is the first major test of whether the coiled spring finally snaps higher. Here is your final map. If you need momentum and immediate growth, target the cooling sector in the top right. It is the only corner of the trade with accelerating revenue. If you are a value investor, target the IPPs in the top left. Be prepared to wait through flat revenue while the market works through the valuation re-rate. For safety and yield, follow the insiders into the regulated utilities in the bottom left and collect the dividends while the grid infrastructure builds. And across all profiles, extreme caution in the bottom right grid names where growth is already priced in and insiders are selling. The AI power trade is fragmented by time. Pick the quadrant that matches your clock. For the full analysis, visit marketdecode.ai, subscribe so you don't miss tomorrow's decode.